The Fed just cut interest rates. What does it mean for the real estate market? Tune in to Tom's Take right now. So last week, the Federal Reserve cut rates. They cut them 25 basis points from where they were previously, and this came after there were 4 rate hikes in 2018, and initially the Fed said they weren't going to raise rates anymore and they probably wouldn't cut them, and now there's even talk of a second rate cut coming, that's a tongue twister there, down the line in 2019. So what does this all mean for the real estate market? Because we know that just by the Fed cutting the key interest rate, it doesn't mean that mortgage rates automatically go up or down. That fluctuates based on the yield on the 10-year T-bill. That's how rates are determined. And right now we are seeing historically low mortgage rates in the high 3s for a 30-year fixed rate loan. So rates are already historically low. And when I researched some of the views from some of the chief economists, the people that pontificate about these sort of things, I wanted to share those opinions with you. The first was Lawrence Yun, the chief economist for NAR. He feels there's going to be little impact from the Federal Reserve rate cut on the 30-year fixed loan. However, and this was pretty interesting, there should be a benefit for other types of borrowers, specifically getting commercial loans and getting adjustable rate mortgages. So I thought that was very interesting from Lawrence, and he's been on the pulse for this stuff all the time. The other opinion I found pretty interesting was from Danielle Hale. She's the chief economist at Realtor.com. And what she says is that although the labor market remains strong with healthy job growth and the unemployment rate near long-time lows, the Fed concerns about economic outlook and the long lag time between lowering rates and seeing effects on the real estate market were the drivers of the decision. And she does not believe the cut's going to cause mortgage rates to drop any further either. And then there's other people that say this could actually cause rates to rise, which I don't really see happening right now, but it could happen. Markets work in funny ways. That comes from Ruben Gonzalez, the chief economist at Keller Williams. So really what this all means is nobody knows what's going to happen. I mean, these are people that are paid a lot of money. They're educated to determine what federal policy will do to markets and the real estate market specifically. And all these people were the ones saying rates would have been in the 5s by now. So I'm not clear anyone knows what this means for the real estate market. What I know is this, that rates right now are historically low. They could go up, they could go down, they could stay the same. These people have been wrong before. So if you're a buyer right now and you see a home that's going to work for you and you're getting a historically low mortgage rate, it allows you to do a couple things. One, it's going to save you a lot of money long term if and when rates do go up, whether that's 3 months from now, 6 months from now, who knows. Secondly, because you're saving so much money there, maybe you compromise on the home a little bit, knowing you have to do some projects long term, put some sweat equity into it, make some improvements because your capital investment is going to be lower, not just initially, but also over the life of the loan because you're saving so much money if rates were even a quarter or a half point higher. And if you're a seller, this is a unique opportunity for you to take advantage of that buyer affordability being at an all-time high because rates are so low they can afford a higher payment, meaning they can pay more for your property. So if you're thinking about making a move, the fundamental reason to do that is because it's right for you, your family, your situation, or you see the right opportunity. So don't let all this noise in the marketplace deter you from making a decision that's going to be right for you and it's going to benefit you, and all the more reason to talk to a local professional that can help you. If you got any questions about the Federal Reserve rate cut or anything else, you know where to reach me. Otherwise, we'll be back next week.